Assalamualaikum warahmatullahi wabarakatuh. My name is Fatin Ain Nazira binti Tukimin. My menstrual number is 255882. Today I would like to do the video presentation about COVID-19. Coronavirus disease 2019, which is COVID-19, a novel pneumonia disease originating in Wuhan, was confirmed by the World Health Organization on January 2020 before becoming an outbreak in all countries. Due to COVID-19 pandemic, the Islamic finance industry slowed dramatically in 2020 after a very high 13% growth rate in 2019. Islamic financial institutions have spent much of the year dealing with the twin shocks of transitioning to the COVID-19 pandemic and extremely low oil prices. According to the status of Global Islamic Economic Survey, assets that amounted to 2.88 trillion by the end of the year 2020, in the line with the is expected to recover, and overall Sharia compliant assets are estimated to hit 3.69 trillion by the end of 2024, until the world economy is in place. For several business leaders, this is time of deflation was an incentive to focus on modernizing Islamic finance, either through the long-awaited standardization of Sharia-compliant offering or through the fast-tracking innovation. One of the impact of COVID-19 on Islamic finance and banking is more rapid finance innovation. The COVID-19 pandemic has stimulated the growth of Islamic fintech technology, which most countries in the world going through a lockdown period. Bank and financial institutions that still relied heavily on branches to run were forced to roll out digital resources. One of the example is Pakistan, which is the mobile wallet Sarapay. They earn central bank permission to process payment in more than 45 countries. Qatar Islamic Bank starting digital on board, and new digital on the Islamic Bank expected to be open in Kazakhstan and Australia in the few months' time. Second impact of COVID-19 is harmonizing rules and standards. With the downturn of global economic activity due to the lockdown, the leaders of the Islamic finance sector used this chance to make strides on the implementation of universal rules and regulation. After the Islamic finance industry began to take off some 30 years ago, regulation or lack thereof have become a major issue. The shortage of global rules and norms has opened the way for each country, which is and often even individual banks, to determine through its own board of Islamic scholar which is activity are permissible, halal, and prohibited haram from a religious point of view. Third impact is Islamic mergers and acquisition survival strategy. Islamic economic strategies such as halal food, modelware, and healthcare was affected by 13% in 2020 compared to 2019. For Islamic business, the overall amount spent dropped by more than 50% this year, from 10.7 billion in 2019 to 4.9 billion in 2020. The countries with the most agreement were Indonesia, UAE, and Kuwait. As a conclusion, in this tough time, Islamic banking and finance policy continue to represent a dedication to financial inclusion that ensure prosperity for everyone, and no one is left behind, as they aim to create a peaceful and dignified country. As a conclusion, in this tough time, Islamic banking and finance policy continue to represent a dedication to financial inclusion that ensure prosperity for everyone, and no one is left behind, as they aim to create a peaceful and dignified country.